Hello, welcome to the session on Sage Intacct Singapore configuration tips and tax setup files. So firstly, before we proceed, I would suggest if you download the original PowerPoint presentation for this session for you to be able to access any CSV, PDF, and XML files embedded on the PowerPoint presentation. So in this session, we will be going through so the purpose of this session is to present you with the important files and references, configuration references for Sage Intacct Singapore. And we will go through quickly on the golden image configuration tidbits, which would be a bit of information that you have to go through, together with the tax objects that are essential to be set up or to be present for you to be able to have tax implications of transactions in Sage Intacct. And we will go through as well the GST reports, some XML files. All right, so with the golden image, so the good thing with Sage Intacct Singapore is that we've created a golden image, which is of quick start template service industry. So the purpose of the golden image is that you have the predefined tax objects in there. So we'll go through those tax objects a bit later. We have the like basic or at least the minimum GL accounts that will be used when you import those tax objects or with that are being used by the tax objects. We have also custom reports in there available. We have the tax box report, which is the GST Form 5. Um, and we have a separate session for that, but I will go through the setup or what you would actually see in order for you to be able to use the tax box report. So the golden image is called the Singapore dash tax dash golden image dash golden dash image. So take advantage of that instance that you can provision the customer instance from it. All right, so with the configuration tidbits, so the purpose of the configuration tidbits documentation, as what you can see here, there is a PDF file that you can make use of. So it's a comprehensive guide outlining the recommended system configuration and best practices for optimizing the use of Sage Intacct in Singapore. So it considers the specific regulatory and tax requirements applicable in Singapore, ensuring compliance while maximizing the efficiency and effectiveness of the platform. So I think what's the best um, option for this one here is if we can open up this PDF file for us to go through what's in it. All right, just make this bigger for us to be able to see the information in here. So, yep, it contains a lot of information, which hopefully will be able to help you with configuring or just insights, essentially what you need to do in order to optimize the use of Sage Intacct, especially when it comes to tax implications with the instance. All right. So firstly is that you have the country, language, and tax ID. So what I would recommend is that under your My Preferences, you can change the language to United States. It's all because of the naming convention in there. When you have that naming convention, then you have the tax ID in there that you will actually see, because at the moment language determines what certain fields are being labeled. So in order to have that uniformity, I would suggest to change temporarily or change your language to United States, and you will see there like fields like a field tax ID that you will be able to see under company information and customer or supplier. All right. And I mentioned in here as well about the country. Um, yeah, just to make sure that you define it as Singapore. All right. So Sage Cloud Services. So when the instance is provisioned from the golden image, you may not need, or you may actually need to re-enable the Sage Cloud Services. So if more specifically, if the instance is newly created, not from the golden image, but from just a service industry quick start template or such, then you will need to enable the Sage Cloud Services, which should be available through this menu path, company admin subscriptions, and you have Sage Cloud Services there, and just click on configure. And once you are being led to this page, then you can just click on save. So the purpose of Sage Cloud Services is that it gives you the tax submission functionality in Intacct. So the tax submission function, one of the functions available through Sage Cloud Services, is tax submission. There is no electronic filing yet from Sage Intacct to IRAS, but you'll be able to perform like tax submission, simulated tax submission in Intacct with this Sage Cloud Services feature enabled. All right. So once you have done that, so you can go through configure taxes. So the purpose of this one here is just for you to enable essentially the taxes subscription. So as what we mentioned, with the taxes subscription, you'll be able to capture transactions, GST implication of those transactions, right? So through this menu path, company, admin, subscription, taxes, subscribe, then you'll be led to this page. Just click on subscribe in there. And once you are being, after submitting save, then when you go to configure taxes, you have an option there to select the value. So you can select, but in this instance for Singapore, um, uh, enable the multiple tax jurisdiction. Um, uh, and yeah, enable the multiple tax jurisdiction in there. And also, I would recommend to enable, turn off tax detail filtering. So the multiple tax jurisdiction in here is that at the moment you'll be able to create or um, like a Singapore tax solution. It's a custom tax solution in the instance. You'll be able to see it there. You'll be able to create, and the guidance will follow later on. And you have the turn off tax detail filtering as well. So with this one here, this feature is more of like removing the restriction on certain transactions like AR and IP. Then you will be having that a wider range of tax detail filtering or tax detail options, at least with AR and AP. All right, so since we've enabled the taxes in there, you've done that. You also have to have the customized tax report feature. All right, so the purpose of this feature is to essentially give you that option to have a tax box report, right? And you can set up GST form 5 in here. So the good thing with this one is that I keep on saying maybe golden image is all because with the golden image, then this feature is already pre-enabled for you. So meaning if the customer instance is created from the golden image, then the customer's tax report feature is already being enabled, and we also have GST form 5 pre-created for you as well as a reference for your GST filing. But if as the customer instance is created from not from the golden image, but from scratch, or maybe just quick start template in there, but not from the golden image at what we saw earlier, then you would need to make sure that this feature is enabled in this instance and ensure with the provisioning team that the provisioning team is aware that they have to click the enable tax detail box. So with this one here, it can be generated from the order itself, just to make sure that the order is mentioning that one, that you have to have that feature enabled, Or um, you can submit a support case if it's not available there yet. So you can submit a support case, addressing it to the provisioning team that they have to check or enable the feature flag called enable tax detail box. And as I would like to mention that at the moment, these tax box report is under early adopter program, but once we have it available for general availability, then you wouldn't need to bother about if the tax if the custom tax report feature is enabled or not, because it's already pre-enabled once it's being available as general availability. But at the moment, if it's since early adopter, if you're creating a customer instance not from the golden image, you would need to ensure that you have this feature enabled for you to be able to make use of the GST Form 5 report in Intacct. So once you've enabled those feature, you can revisit the tax object permissions under taxes application. So you have here the menu path. So it can be from, it depends on what the customer is, right? So I mentioned in here, it can be based on the users because there are certain customers who have their instances to be based on or permissions based on users. You can also create roles for those users anyways. So yeah, so either user roles in here or for external user as a partner, then you'll be able to slide into your customer. So you have to define these permissions on your external user profile for the customer, then users or roles depending on what the customer requirement is, whether the permissions is based on user or role. All right, so under the taxes module in here or application, then you may just click on all in there so you'll be able to see these features essentially. And even for aside from activities and lists, you'll be able to enable all as well for reports. At the moment, we have this tax report. So with this tax report permission, we're talking about the feature in there, which is your custom tax box report. And related to that one as well is the tax detail box in here. So the tax reports will be housing your boxes essentially. So you have to have those permissions. And with us feature that I mentioned earlier, which is the tax customized tax box report, then you'll be able to see these permissions. And yeah, so with if the instance is coming from the golden image, then the custom tax solution called Singapore GST-custom is already in there. But if you have it created again, not from the golden image, but just from a quick start template, then you will need to create a tax solution. So I would suggest that make sure that you have your tax solution is created as custom. You have Singapore GST-custom, and yeah, do not use the Singapore GST-SIS. So what we're saying in here is that previously you saw multi-tax jurisdiction, right? So from there, if you've enabled it, it goes with no tax and another tax solution as well. So those ones are free, and adding up Singapore GST custom, you will not be charged at all. It's all because the multi-tax containing just the Singapore GST custom, it goes with a subscription already. But if you enable a Singapore GST-SIS on top of Singapore GST dash custom, then you will be charged for the additional a tax solution in there. So for now, just make sure that you are using a custom tax solution called Singapore GST dash custom, and do not use the Singapore GST dash SIS, which is a standard tax solution, which we will be using later on. But in customer configuration, just make sure that with the multi-tax enabled, create, or you should see just Singapore GST-custom. Never ever use Singapore GST-SIS at the moment. All right. And this is the menu path to do that with the permissions that we've seen earlier. Then you can create that tax solution in here. So we have taxes, setup, tax solution, add, and we have all these information that you can fill out. From as well, you can see from the type here, it's actually custom, and you have the name there. You have this description, submission process as user defined, as tax engine should be VAT or GST, and status it will just default to active anyways, but just make sure that it's active so you'll be able to make use of it, meaning you can add more tax objects that we will see later on and use them or use it actually in transactions, right? With the tax engine information in here, yeah, there's a guidance on what you can put as the date in there, but yeah, so the earliest date, first day that you start using Sage Intacct in production, just use that one there. And once you haven't done any tax submission yet in Intacct, meaning just the process of tax submission, right? Because there's no electronic tax submission yet from Intacct to IRS, but simulation of the tax submission in Intacct. Prior to do that, just finalize the start date of first, tax submission period, which from here, right? So it's more of usually the start of when you start using, or the date when you start using Sage Intacct in production. All right. And you can change that prior to finalizing the tax submission in Intacct. So yeah, so you can put a date in there, like maybe potential go live date. So that's okay. And before the customer submits or processes a tax submission in Intacct, then might as well just adjust it accordingly. All right. And this one here as well, enable multiple tax per line. Yeah, turning this option on is permanent. So we have transactions, we will be using multiple transaction details on a transaction line, just like for customer accounting or reverse charges. So might as well have this enabled. So for you to be able to have that, not just one tax detail on the line, but multiple, like a positive and negative, then you have to enable this one, which is enable multiple taxes per line. All right, so yeah, so similar to other objects in there, like for accounts payable or accounts receivable rather, then just ensure that you have these permissions related to taxes, tax detail, tax schedule map in there, both for accounts payable and accounts receivable. And yep, still related to tax objects, just make sure that for your company order entry and purchasing applications, especially if you're using order entry and purchasing, just make sure that you have the permission as well. So, from company in here, the company is where the contact tax group is coming up. And order entry, you have the item tax group in there. Similar to purchasing, you have the item tax group, and even for the other objects as well. So enable those features, and we will explain later on what are these permissions rather related to. So, from accounts payable, accounts receivable, company, if you're using order entry and purchasing, make sure that you have all these permissions enabled. So it depends whether you are sliding into the customer, if you are a partner, or if you are dealing with a customer, then the customer should have these permissions available in the role defined on the user. Or if they're not making use of the role, but the permission is user based, then the permission should be added on the user or users. All right, so yeah, GL accounts. So ensure that the following GL accounts are created for configuring taxes. So we have this GST receivable to define the GST receivable accounts. So default GST accounts for input tax details. And we have the GST payable as well, which, yes, GST receivable will be for purchases, right? GST payable will be for your sales. So default GST account for output tax details. And if you're using disallowed expenses, then yes, when applicable, define a generic expense account for disallowed expenses, and we will see later on as well what's the impact of that GL account. And if you are filing for ES 33, if you have realized exchange gain or loss, Then you have to define the realized currency gain or loss account as well, which is your exchange gain or loss, right? And we will go through the process of reporting ES33 later on too. And of course, we have the written earnings. So this is a required a GL account. It's all because these disallowed expenses and realized exchange gain or loss are profit and loss accounts. You cannot save them until you define the written earnings. And we know in Intacct you have the virtual close, right? So the virtual close is like moving the P&L accounts to written earnings, done automatically through financial report mechanism. So there's no need to move P&L balances into real accounts or to written earnings at that. The financial report writer will just be doing the movement of the P&L to written earnings depending on the period that you are dealing with. So that's the virtual close, which is very powerful in Intacct. Okay, so with this, because all these GL accounts are related to the tax objects, so we will go through the tax objects this time. So if I go back to the PowerPoint presentation. All right, so these are the tax objects. So what are the tax objects? So we have at least five tax objects. So the file uploads are available in this PowerPoint presentation as well. So I would like to emphasize that if the customer instance, again, is coming from the golden image, then these objects are pre-loaded already, which means that you don't need to upload these files that will be available for the succeeding slides for you to populate all these tax objects from item tax groups, contact, tax details, tax schedules and tax schedule maps. So you don't need those if the customer instance or whatever instance you're using with is already generated from the golden image. So you don't need those. But again, if the customer instance is a blank instance, meaning maybe it's just coming from the quick start category, right? So it wouldn't contain the tax objects. Hence, we have these slides that will guide you. All right, so firstly, we have the item tax group. So item tax group, so this is to essentially apply different taxes on items. So this is the menu path that you can upload the tax group, and that should be available under taxes module as well, not just on company setup, but it's also available under taxes application. And yep, and this is the CSV file, and you can just upload this through this link or through the taxes in there. So it's just this one. This is of use primarily for purchasing and order entry for defaulting of the taxes. So it's just telling you what will be or defining what will be the tax implication or the grouping essentially of that item, so you'll be able to auto-generate or auto-fill the tax schedule, especially for order entry and or purchasing. All right, so related to that one is that we have the contact tax group as well. So the contact tax group is the one, so the item tax group is the one that you define right on the item, but the contact tax group is the one that you define on your customer or your vendor and their contacts according to their tax jurisdiction. So it's more of like combination. We will see later as well that this works hand in hand with item tax group and tax schedule map, and just to determine what will be the default tax schedules, particularly for purchasing and order entry. So just the grouping as well of the item. Earlier, we look at the item, and now it's more of the customer, right? So what will be the tax implication for that customer? But then again, this plays more, um, if defaulting of the tax schedule on order entry and purchasing. But we will see later on as well that you have the freedom to change it on the fly. Maybe certain item you have the default tax implication there, but at a particular scenario, then you may be able to change the the tax implication on that particular transaction, even if they have like a default tax schedule. All right. So another object is the tax detail. So what's tax detail? So it's a combination of the types of taxes and their associated tax rate. So the tax detail just gives you the information as to the GL accounts, what's the tax rate in there. And if you have a look at the CSV file in there, you'll be able to see what are those essentially. So we have, you also have the GL accounts there defined, right? So you have the um, a percentage, and whether it's applying to purchase or sale and other information. So yeah, so have a look at the tax details in here. So this would be available for you to upload if the instance is not coming from the golden image, then yeah, you'll be able to download and upload this file or tax detail there. All right, so and you mentioned earlier, right, when it comes to GL accounts, so we have those five GL accounts pre-created if it's from the golden image. So the use of that one, essentially, um, those GL accounts, especially the GST receivable, payable, and disallowed expenses, those are actually defined on the tax detail itself. Right. So yeah, hence the reason why we have to define the GL accounts, because Um, the golden image already presents those five GL accounts, but when you upload it, if it's not coming from the golden image, just make sure that you have GL accounts, at least the GST receivable, GST payable, disallowed expenses, right, and written earnings for sure, right. Should be there, because when you define, when you upload the tax details through this import file, there's a field in there for the GL account that you have to specify what will be the appropriate GL accounts. Right, and if you see anything about reverse charge in there, it's certain items or certain lines should be true based on this import file, and just change the from uppercase to lowercase, just like instead of all caps true, then all small letters true should be seeing in there for you to be able to upload it correctly. All right, so that's the tax details. And we have the tax schedule. So what's the purpose of the tax schedule? So this is to identify the tax details that are applied when referenced by tax schedule maps. Okay, so maybe just to provide more information with the tax schedule. So the tax schedule, it's more of like a bucket of the tax details. So the tax details, remember, the tax details are where you define the GL account, the um, GST rate, right? And the tax schedule will house the tax details then. Right. So with the tax schedule, you can have like multiple tax details in there, just like as what we said earlier with customer accounting or reverse charge, right? So there should be like positive and negative in there. For you to be able to achieve that is through the use of tax schedule. So you have one positive, one negative. So one tax schedule, and you will see like at least two tax details there. One tax detail is positive, one is negative. So that's the purpose of the tax schedule. And the tax schedule is more applicable with purchasing and order entry. It's all because we have in under purchasing or order entry, you have the option just to select the tax schedule. But in AP and AR, you have to select the specific tax details essentially. All right, so that's the tax schedule. Again, you have this import functionality that you would be able to make use of if the customer instance is coming from a blank a provisioning one, meaning it's not coming from a golden image, right? So you'll be able to do that then. And you can make use of these files anyways for references on what you will be seeing in the instance if it's coming from the golden image, just for you to understand as well what's going on in there. All right, so we have the item tax group, right? So we have the contact item tax group, which is defined on the item, mere like classification of the item. You have the contact tax group as how you define what will be the tax implication for your um, customer, supplier, vendor, right? And you have the tax detail, which will house the tax rate, GL account at the minimum. And you have the tax schedule, which will house the tax detail or details, right? And now you have the tax schedule map. So the tax schedule map is to associate one or more combinations of contact tax group, item tax group, and then map or essentially drive the taxes that are applied on the line item. So what the system does when it comes to purchasing an order entry is that it actually looks at the item tax group of the item that you define. Then it looks at the contact tax group as well that you define on the customer or supplier, depending on the transaction, right? And then because of the mapping in here, you're saying that you have the item tax group, you have the contact tax group, and this, if these two match, and you have identified what will be the map in there, which is the tax schedule, then on the transaction itself, that's the one that will default on your transaction, particularly for order entry or purchasing. So that will be the default. So it's a combination. So the tax schedule will be combining all of these objects, particularly for order entry and purchasing, just to give you the default tax schedule, because the tax schedule map will house your item tax group, you have your contact tax group, and your tax schedule map. Right. And because we know in purchasing, you can only see the tax schedule map in there, and the tax schedule map will house the tax detail or details, which gives you the granular level of what the tax rate and eventually the GL account for those tax implications. All right, so that's the tax schedule map. So we have those five tax objects that you would need. You know, if it's not coming from, again, if it's not coming from the golden image, then you would need all these files in order for you to um, make use of the tax functionality, right? So you have your um, the custom tax solution, which is Singapore GST-custom, and build the objects around it. So item tax group, contact tax group, tax details, tax schedules, and tax schedule maps. All right. So let's go back to that PowerPoint presentation or to the PDF one, just to go ahead with the other um, details there. All right, so GL accounts for SRCAC and SRRC. So these are for customer accounting for supplies and reverse charges accountable by customer. So yeah, so revisit the if you are if it's coming the instance if it's coming from the golden image or if you are uploading it anyways, right? So what we said earlier is that with the tax detail, just make sure that you have the correct GL account in there. So I would like to reiterate that for this particular, CRCAC, CRRC, just make sure that you have the GST payable in there, because these two are applied on purchasing, right? So with purchasing, it will be typical for GST receivable anyways, right? But for this particular one, which will be your like the negative part of the transaction tax implication, right? So they should be posted to GST payable, not GST receivable. So I just would like to point that out, that you map them accordingly. Yeah, and yes, for disallowed expenses for purchases where GST is incurred, but is specifically not claimable. So we have a tax detail there called BL disallowed expenses. So you have to assign again the appropriate GL account, especially with the mapping of your tax detail, or change it accordingly if it's coming from the golden image, right? If you're uploading those tax objects, just make sure that you have the correct um, GL accounts, right? So I just would like to point out this one here when it comes to disallowed expenses. So this is the account. If it's coming from the golden image, then you have the 7010 disallowed expenses GL account in there. So if for disallowed expenses, you can have like you have an option to post everything essentially to this GL account. So regardless of whatever the expense account on the line, then use any tax implication, right, instead of GST receivable, then it will just be posting to disallowed expenses, which is a P&L account. But you have an option in here, which is assign taxes to expense account. What it means is that when you have it enabled, then even the tax implication posting is will not be posted to the disallowed expenses, but on the actual expense line. All right. So as an example for this one here is that, okay, so let's just have it disabled. So if you have a 9% implication, right, for disallowed expenses in there, then it will post to 7010. But if it is enabled, then if you use, let's say, miscellaneous expenses as your expense account on AP purchase invoice, if you have this enabled, then both the net amount and the GST implication for disallowed expenses will be posted against miscellaneous expenses. So you will see there at least two lines. One is the net amount, which is the actual expense, and the tax implication. Instead of posting it to disallowed expenses, since you have this checked, then the tax implication will be posted to the miscellaneous expense, not the disallowed expenses, which is defined on the tax detail. All right, so I hope that's clear when it comes to disallowed expenses there. All right, so GST reports, I'd like to go back to the PowerPoint presentation in here just to uh, give you that option. Or before I do that, so with the GST reports, yep, so we have GST reports available just to help you reconcile the postings and the different tax details. So the GST reports that I will show you later on as well, but not in detail, but it's more of like what you will see on the instance itself once you have that XML. It's more of just a guidance really of the tax details. So we're not grouping them yet because we have a GST Form 5 that will appropriately show the different tax implications of different boxes, but the GST reports that we have available of like giving you the information on tax implications per tax detail. So the GST reports are separate from the GST Form 5 report. The GST reports just give you the figures grouped per tax detail, regardless of the box where they will actually go. So they just provide you an additional way to reconcile. But we have a separate GST Form 5 report anyways, which will give you the grouping of the transactions as to which boxes the tax implication or the net amount should actually go. All right, hope that's clear when it comes to GST reports and GST Form 5 reports. So GST reports are those just reports essentially that are grouped based on tax detail, regardless of boxes. But the GST Form 5 report, which is a tax box report, gives you the actual boxes where the transactions actually go. Depends on the transaction there. All right. So you have the menu path in here. So you have you can customize if it's coming from the um, if you have an XML anyway. So I'll show you that XML. It should be available here on that slides. Yep, this one here. So GST reports XML files. So download. As I said earlier, just make sure that you download the PowerPoint presentation for you to be able to download an embedded attachment, right? So in this case, we've seen like CSV earlier, PDF, and now we have XML file as well. So with the XML file, these are like reports that are already there. So at least you have two reports here. We have the GST details report, GST summary report. You can download this one and upload them in through this link through platform services, all custom packages. So once you upload these two XML files one at a time, you'll be able to see these two reports, GST details report and GST summary report. And these are the reports that I was mentioning in here, which are based on the tax details as what we've seen earlier, right? So the tax details in there, but not really grouped per box because we have a separate report for GST Form 5 anyways, which gives you the boxes, right, and figures of where the transactions actually go. All right, so what I'm mentioning in here is that when you have those XML created, right, or uploaded in the system, They are, I believe, being tagged to general ledger application. But if you want to maybe group those reports under just taxes application, this is just a guidance for you. You can just duplicate it and just change the application to taxes and maybe put a different name in there, save and add to menu. So you'll be able to see that report not on the general ledger application, but on the taxes. So it's more of like just where you want to see those these two tax reports, right? Because if you don't edit that, then you'll be able to see those reports anyways under reports, custom reports, or general ledger. But what I'm saying in here is that if you want to group reports under the taxes application, then might as well just duplicate these reports once you've uploaded the XML files and just save and add menu and just choose the applicable menu that you would like to see, like taxes in here, put a new name and save it. And at least everything will just be grouped in the same application, right? And it's easier for the user anyways to refer back. All right, so this is the screen, how it's being done. Your application task is in there, and yep, and we have this GST reports XML files that I showed you earlier that you can download from the PowerPoint presentation and then upload it in Intacct and modify it in such a way that you can change the application, or not really change, but duplicate and assign the correct, applicable application rather that you really prefer. But if you're happy with General Ledger or just looking at the custom report, listing, that should be okay. Not a problem at all. All right, so yep, moving on with the configuration of on accounts payable and accounts receivable. So just make sure that yes, the reason being for this one here is that remember we have a golden image. So if the customer is coming from the golden image, then part of the configuration anyways is you have to revisit the accounts payable configuration and accounts receivable configuration. Since if the instance is coming from the golden image, we pre-configured the like the basic or some fields on the AP and AR configuration. Since we only have like 5 accounts, right? So the GL accounts of the transactions defined on the configuration page will be wrong. So just make sure, I would like to flag that make sure that you revisit the accounts payable and accounts receivable configuration pages, especially if the instance is coming from the golden image, and just make sure that the appropriate GL accounts are being assigned. Let's say for adjustments for AP, because we just defaulted everything to, I think, GST receivable and GST payable, since we only have those 5 accounts, right? When we generated a golden image. So part of the configuration process, just make sure that you adjust those settings under configure AR and configure AP to the correct GL accounts. All right, with the moving on with the configure order entry. So yeah, I would recommend whether you're coming from a golden image or if the customer is coming from the golden image or not, just enable the override of tax schedule on document entry. And yeah, similar to purchasing as well, just enable that override of tax schedule and document entry. So the reason for this being is that we mentioned earlier the use of tax schedule map, right? So the tax schedule map will provide you the default tax schedule of combinations of item and contact tax group, right? And the tax schedule in there, which houses the tax detail or details, right? But then again, certain transactions or maybe an item or a particular vendor may attract different tax implication. So might as well just enable this feature in order for the user to override the tax schedule on the fly on the transaction itself, right? So at least um, the user will not be bothered by the default of value in there. So it can be like 9%, right? But for a particular transaction, maybe it's zero and a different tax detail. So change that accordingly, essentially. All right, so with purchasing transaction definition in here, so more for if typical one is we have a purchase order, right? So if you have a purchase order, then that purchase order may not have any GL implication. But for some, they want to have like GL implication on purchasing. So maybe just a commitment. So I'm talking about commitment book, which is a user-defined book, meaning once you have the purchase order, you have it already posted with GL, but not on accrual, but on a user-defined book called commitment. So if that's the case, it's not a requirement anyways, but if you go down that path, that you have the purchase order, we have the tax implication, or um, a GL posting rather, meaning a purchase order already posting, right? But comes maybe a receipt or invoice reverse the entry in there in the user defined book. It's a different discussion anyways, but if you have the purchase order posting to the general ledger, just make sure that you check this one here. Do not capture tax. It's all because this will avoid having this purchase order transaction showing in the GST form 5, which you want anyways, right? Meaning a purchase order should not be showing in there, but only when a purchase invoice is generated. So if a purchase order is posting to a general ledger, just make sure that you enable the do not capture tax. So you will not have duplicate implication of the same transaction in GST form 5. So you have the purchase order and you have the purchase invoice in there. All right. So we have prescribed goods minimum value purchasing. So we have this requirement for prescribed goods like mobile phones, memory cards, and off-the-shelf software that the GST exclusive value should only exceed 10,000. Right. So with purchasing in this one here, although, yeah, so the purpose of this smart rule is to essentially have that control in your purchasing module. If it's coming from the golden image, again, um, while we have turned on purchasing, it doesn't have any transaction definitions yet. So a requirement for the smart rule to be created is that you have to have transaction definition. Since we don't have any transaction definition, you will need to add this smart rule in order to have that kind of validation, which means that prescribed goods, tax details or tax schedule, in this case, this is purchasing, right, can only be used if the GST exclusive value is more than 10,000 Singaporean dollar. All right. So, yep. So this is just a step in here. So you choose the um, uh, object, which is the purchase order transaction detail. And once you create, you have to create the purchase transaction anyways in there. You have to create first the purchasing transaction definition where the validation will apply. And you have the step 2 in here, which is error as to what event, add or edit, and you have the condition. So I put all of these information in here, at least with the condition. So you can just copy and paste it as you create the smart rule. And creation of smart rule is using this menu path, which is platform services, all smart rules add in there, and you have the error message. So it's up to you what you would like to have the error message, but yeah, you can just copy and paste this as well for a quick reference in here. So this is more for purchasing. So to have that control that you'll only be able to use, TXEA, right? We know the TXEA in here, you can only make use of that if the GST exclusive amount is exceeding 10,000 SGD. So you have to have that smart rule defined in it with a correct purchasing transaction definition as well. All right. So you have this smart rule ID in here, so you can just copy paste all this information as you create your smart rule. Yes, so we have that one in purchasing, but we also have one in accounts payable. So the good thing with accounts payable is that if it's coming from the golden image, then the smart rule is already in there. But then again, if the customer instance is not coming from the golden image, then you have to create this um, smart rule for accounts payable. So you have a smart rule for purchasing. If you have purchasing, and you have also a smart rule for accounts payable. So these are two separate ones. All right. So I just would like to highlight in here when it comes to purchasing, if you're just using purchasing, especially for prescribed goods in here, so you would need to create like a custom field called prescribed goods, and you have the menu path in this one, how you can create it, and it has the field ID prescribed underscore um, goods is checkbox field applied on AP purchase invoice detail or AP bill, depending on the language they're using, meaning language that you've defined in the configuration instance using your my preferences. All right. And just make sure once you are in AP purchase invoice or AP bill page, click on edit enters layout and put that somewhere. You know, if you have your show me details, right, or show details, if this is not coming up, you have to go to show details and move that along on the line level in here, so it's easier for the user to use. So essentially, they would need prescribed goods filled in here in order to have that validation being read, essentially for uh, AP prescribed goods under direct accounts payable transaction. All right, so yep, just a definition in here, how it looks like for step three with the label, default value field in there. And you have this, yeah, similar to AP with the purchasing rather, you have here the smart rule, right? So yep, so step one in there based on AP purchase invoice detail. You have the condition, you can copy and paste this condition and put that along there and similar to the message, right? And you have the smart rule ID in here. You can copy and paste this along with the description of the smart rule and just save it essentially once you're done. So I have an example in here for AP purchase invoice or bill line, is that make sure again that you have your prescribed goods available there. And remember the option earlier that we've seen about enabling multiple lines through the configuration of the taxes. So whether multiple or single, right? But we will be using multiple anyways for Singapore, and just make use of the Singapore GST custom tax solution. Then that's the reason why we have that enabled in here. So this is just an example, right? Prescribed goods will have negative and positive there. So enable this one, but the user has to make sure that since that's the difference with AP bill or AP purchase invoice versus purchasing. With purchasing, you have the tax schedule in there, which will house the tax details already. But with AP bill or AP purchase, then user has to identify the specific tax details. So in this case, you have TXCA and SRCAC. So the user has to make sure that this tax details have been included here together with prescribed goods checks, multiple taxes online checked as well. All right, so prescribed goods check, multiple taxes per line checked, then the user will be able to identify this tax detail. And that's where the validation kicks in, essentially, with the smart rule. So yep, so that's the description or distinction between purchase prescribed goods handling between purchasing and accounts payable. All right, so moving along with ES33, realized exchange gain or loss, as what we said or as what Iris mentioned with e-tax guide. So the net losses incurred only absolute value drop the negative sign, right? So which means net losses. So you have to combine, right, all the realized exchange gain or losses within the reporting period. So it's not on per transaction basis, but if you're reporting, let's say for a month, for a quarter, then the net losses should be combined, right? And if it's net losses, then should drop the negative sign. So in Intacct, what it means is that instead of debit, which is the loss, right? So it should be credited. So ES33 should be showing on the credit side, right? So this is the guide in order to do that. Firstly, is that you have to enable or check the enable tax adjustment journals, right? So, and that's available through the menu path general ledger. And this one here, you have an option there, which is enable tax adjustment journal. So with that enabled, then you have the option essentially to um, have the adjustment, because we don't want to have the adjustment shown in the accrual book, right? We only want it on a separate journal, just to exclusive essentially for ES33 if your company is using ES33 in there. So just make sure that you have to enable this one here, and you have to create a tax adjustment journal. So once it's enabled, you have another area in there that you can post transactions. It's called tax adjustment journal through general ledger, setup, tax adjustments, and the symbol is TAJ, a tax adjustment journal in there. And you have to create a report though, with the um, golden image. You already have that custom report called ES33 realized exchange gain or loss. But if the instance again is coming from scratch, meaning it's not coming from the golden image, you have to create a custom report which is based on GL entry. So even if it's golden image or you create from scratch, then meaning not from the golden image, then you can have a look that if you have any ES33 reportable transactions, then you have to create this report first. So it's based on GL entry, because that's the journal entry anyways, right? In this case, it's going to be the TAJ. And you have here like sample of the fields that you can display, but more importantly with the amount in here, transaction type as well as debit or credit. So you can have a look at this and just map them accordingly to your report. And yep, under step 7, so you have to filter it. So based on, so this account is pre-created if it's coming from the golden image, right? So if you have a different account for realized exchange gain or loss, then update this accordingly, update this report accordingly with the correct GL account. So only those transactions posted to this GL account will be included. Together, of course, we have to make sure that since we're talking about ES33 is applicable only for customer receipts or customer customer receipts in there. So the symbol is equal to CRJ. So CRJ is typically, so with the golden image, we have predefined journals there. CRJ is custom receipts journal. So anything transactions with foreign currency, realized gains or losses as a result of customer payments, then since customer payments being posted to journal CRJ, assuming that you're using CRJ as your journal for customer receipts, then put that accordingly in here just to make sure that you're only capturing customer receipts, foreign denominated payments, right? Or payments with customer payments with realized exchange gain or losses will only be captured for AS33 reporting. So the report will look like this one here. So as what you can see, I only have one transaction in here, which is transaction type as debit, 155. But then again, what does IRS say is that they should be reported as, remove as an absolute value, right? And remove the negative. Let me just scroll further up in here just for us to, yep. So only the absolute value drop the negative sign. So in order for us to do that in Intacct, so this one is positive for sure, right? So what we can do is that you have the sample journal entry in here through this menu. So only the absolute value. So in this case, we have 155. So ES33 should be shown under credit. So the transaction will look like this one here. We have debiting, the second line, debiting in here. Sorry, first line rather. So we have debiting 155 for the same currency exchange gain or loss account, right? So in our case, is 7,500. Yep, so 7,500 for both debit and credit. The only difference is that with the credit, since we are removing the negative balance or negative sign, we have to credit it. So that's where we will show the tax detail ES33. Right, so it should be on the credit side, which is 155. So regardless of whether net loss or net gain, looking at what Iris is saying, then we should be showing, you should be showing ES33 as on the credit side. So it will be captured accordingly with GST Form 5. All right, so with the gross margin scheme, so this is just a reminder with just gross margin scheme. So the tax code NA, which is to be used here, the tax code or tax detail NA, right, to be used should calculate the GST on gross margin, which is different from ex-GST or GST exclusive price, right? So in that case, I would like to reiterate that it should be done manually outside the system. So calculation of the tax will be done manually, just like an example in here, right? So um, it's not the GST, it's not based on the ex-GST price, which should have been, if you have 100 in there and 9% of it, and that's it, right? But not in this case. It should be based on a gross margin, which is selling price minus the cost, right? So this should be calculated outside the system, but you can key that in this transaction. So for example, you have an invoice there, which is yeah, the transaction amount. We have the transaction amount as selling. Yep. Yeah, with the calculation in here, so the value standard rate, right, with the calculation in there. So first, calculate the tax implication, which is selling price minus cost times the rate is 41.28. Then selling price was actually 1,500, so less 41.28. So we have 1,458.72, which is the net amount. And the tax detail is NA. As what you can see here, NA in the system defaults to 0. But since this is GST on gross margin, which is based on the gross margin itself, so it will not be 0 as the tax amount, but rather the pre-calculated amount, which is 41.28. So just have to override the transaction tax with 41.28, and you should be good to go. And as what you can see here, the transaction total, which happens to be the same as the base total because they have the same currency, base currency and transaction currency, we have 1,500, which is what is given in here as an example. So yeah, just to reiterate with the gross margin scheme, the tax amount will be calculated outside the system, just what has been mentioned in here as an example, and key that in because the NA in the system defaults to a 0%. We don't want 0% for gross margin, right? So there should be like the tax will be based on the gross margin in there. And as well, you can see with the tax implication in here, tax payable 41.28 instead of 0. All right. So moving back to the slide in here. Yep. So that's essentially it for Sage Intacct Singapore configuration tips and tax setup files. And hopefully this demo or this session actually helps in configuring and some tips essentially on how to make sure that you will be optimizing or the system will be configured properly in order to have the tax implications calculated and reported accordingly. So again, hopefully this session helps. Thank you.